Hi, let's talk about Farms International. It's a company with its subsidiaries produces, markets, distributes greenhouse-grown tomatoes, bell peppers, and cucumbers in the North America. The market cap of the company is 900 million, and full information should not consider investment advice. The trading fortunately is happening 91% below the size estimated fair valuation, and earnings are forecasted to grow hugely over 45% per year. Earnings grew by 400% over the past year. They have the earning call today, and but there's a risks high volatile share price over the past 3 months, large one-off item impacting financial results. Also, there's this insiders that have been selling the stock, and also shareholders have been diluted in the past year. So pretty much simple Wall Street have the yesterday's price, and yeah, they had the peak on the mid-February. Anyway, market performance shows that 1-year return is 225%, beating the industry, beating the market. Also the 3-year return 156%, and 5-year return 790%. And of course, long-term price volatility is the highest, because the volatility of the year you see here. So those who bought exactly last year could profit pretty much, yeah, 500% even. Anyway, 5-year frame, so there was upsides and downs, so, and on the max. So pretty much if you're a long-term investor, you could benefit very much. So in a few years, so 1400%. Valuation side, based on yesterday's price, which were $11 per share. The simple Wall Street does not, I think it's not accurate as the tip rank or market watch, but a fair valuation based on simple Wall Street is $135. The tip ranks shows that $19 could be the price target currently, and 12-month forecast in good scenarios $26. So there's currently 135% upside, and on the market watch pretty similar numbers. An average stock price target $21, and yeah, the price dropped in only one trading day by 26%. So that's what I mean by highly volatile share price. So if you enter it, for example, yesterday at price, yeah, for example, $11, the next day you wake up and you have like minus 30%. So be careful, invest less than 1% of your portfolio. It could be fine, 1 to 3%. And future growth for the company is forecasted, yeah, hugely, 45%. And also earnings per share is forecasted as well as to grow, which is very good. Yeah, there's one-off gain of 23 million impacting the last year's December 31st on the financial results. So they have been maybe selling some of the assets. And financial health side, yeah, the debt level was increased, and actually they have last year's numbers here. Cash level decreased, they took some of the debt, equity is raising, and yeah, debt to equity ratio is less than 40% of it, which is satisfactory. If it would be over 40%, it would consider as high. But yeah, this is pretty satisfactory balance sheet. So yeah, almost 30% the depth. Dividends, they're not paying dividends. They had paid in 2005, since 2005 to 2010. So they had peak on 2006, then they decreased, and when was the stock market crash in 2008, they reduced it to zero. And so that's one of the themes that I'm gonna discuss about the dividend growth and about the dividend stocks in the future videos. Ownership, so we see here in 1 year they have been pretty much selling individuals only, and nobody brought the stock. And there's here you see the sums. So biggest on the 6 million, 29th of December. And ownership breakdowns looks this: general public holding 61%, institutions 25, insiders 13. So it's pretty much only general publics here, mostly. Top shareholders, we see here that many of the, I see only one is on red. So there's a company, Advisor Shares Investment, decreased by 4% almost. Last reporting holding date 31st of December. So this is not fresh data here. It's a few months ago. And Finviz shows that the correction is coming, the correction is on, and the valuation of this stock could even drop to those numbers that we had last year, so around $5 per share. So I'm not going to surprise if the price would fall by another 50%, 30% in this week, for example. And this also could be going parabolic, so it could, if something good happens, good news, good, like on some of the expansions, deals, and so on, acquisitions, it could pump up. But if you're playing for sure, then there's a reason to wait some of the better prices. And simple safe dividends shows that shares outstanding increased and total sales increased as well. So not so highly volatile share as I used to research. The stock is pretty stable, but we see here ups and downs, but it's less than than from the stocks I used to research. This company is founded in 1989. And investing.com, summary the stock for long-term investors, and I do recommend only to invest in long-term. That reduce investors' risks, and there's less opportunities to lose your money. It's summarizing as a neutral by moving averages as buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.